Welcome to The Explainer. Today, we're literally putting on our detective hats to tackle an absolutely crucial piece of banking analysis. We're going to test management credibility by looking squarely at their guidance versus their actual delivery.
Okay, let's dive into this. Numbers tell you the past. Management tells you the future, but only if they are credible. I mean, it really hits the nail on the head, right? This quote perfectly sets up our core dilemma. You can crunch historical balance sheets all day long, but stock investing? Well, that's all about tomorrow. And who's telling you about tomorrow? The management team.
Step 9 of the Banking Analysis Framework. The future is a promise. We really have to treat management like suspects, giving us an alibi for the future. Because you see, stock markets trade on the future. But whose version of the future are you actually buying? This is a trap almost all novice investors fall into. They hear a company's PR spin, they read the upbeat forward guidance, and they just take it at face value. But you have to ask yourself, are you buying a reality-based version, or are you buying a highly polished PR version?
Now, what's really interesting about this slide is exactly where this habit kicks in. By the time you reach step 9, you've already done the heavy lifting, looking at core earnings and capital buffers. But step 9, this is the habit that separates serious analysis from just blind trust. It's where your hard quantitative data meets a qualitative assessment of the actual humans in charge.
Guidance versus delivery, the ultimate litmus test. Remember, trust but verify. We have to look backward before we ever listen to a new forward promise.
And that brilliantly illustrates our core conflict. On the left side, you've got what management explicitly stated last year, the big, grand promises. And on the right, what they actually delivered. Comparing those historical promises to the cold, hard reality of the present is literally the only way to find out if this team is actually competent.
Testing the 4 metrics. The interrogation. Let's pull the exact evidence we need to interrogate their track record effectively.
So here is your evidence list. The framework demands we pull 4 very specific operational metrics from last year's guidance to start our investigation. Number 1, loan and credit growth. Did they actually expand lending like they promised? Number 2, margin. Did they maintain their profitability on those loans? Number 3 is slippage or asset quality. Basically, how many good loans turned bad compared to what they predicted? And finally, number 4, credit cost. Did they accurately forecast how much money they'd need to set aside for those bad loans?
Okay, so how do we use this? You literally build a report card. You line up the stated guidance from last year, right next to the actual delivery today. You're cross-examining what they said they would do against what the numbers prove they actually did. It creates this undeniable scorecard of their honesty.
The credibility-adjusted view, delivering the verdict. Now that we have the evidence from our 4 metrics, we have to render a final verdict on the management team.
So the crucial point is really contrasting these two outcomes. If a team consistently meets or beats its own guidance, they've earned the right to be believed, right? You can plug their new projections into your models with a lot of confidence. But if a team repeatedly misses guidance, no way! Their forward outlook has to be discounted heavily. You literally have to financially penalize their future promises because they've proven they just can't accurately forecast their own business.
And that gives us the credibility-adjusted view. This is basically reading a management team's new forward guidance strictly through the lens of their historical delivery and accuracy. This adjusted view, it's the ultimate weapon for a serious analyst. It means you never read a press release in a vacuum ever again. You read it through the filter of their report card.
So I'll leave you with this. The next time a bank CEO gets on a podium and promises massive growth, will you just blindly buy their PR, or will you take 10 minutes to check their track record first? Applying this single step separates the gamblers from the serious analysts. Keep verifying, and I'll catch you next time on The Explainer.